Welcome. It is time for Amazon. I don't know if you own the stock. I hope you do, because it has been doing tremendously well. Unfortunately, I never purchased Amazon. I always thought it was a little bit expensive, and then it was, going higher and higher and higher, and then I thought it was expensive, and then it was going higher. That's the problem with that many investors, not most, many investors have with high prices, and this is why sometimes companies split their stock in order to make it more psychologically approachable to investors. Amazon never did that. I wish they had, because I never really bought it, and I had many opportunities in the past. Thankfully, I have bought other stocks of that sort, like Google and Apple and Facebook. I have bought all those over the years. Sold, bought. I still own some of them, like Facebook. I'm currently owning. So we want to examine Amazon because it's a behemoth, obviously, and it's one of the biggest companies on earth. And we want to see whether we can actually profit from that. And as usual, we will examine the financials of the company and see whether it makes sense to add to our portfolio. First of all, thank you for watching this video. I hope you enjoy the videos that I'm making for you. I'm spending quite some time actually, analyzing the financials before making this video. So if you enjoy that and if it helps you and saves you some time, you can leave a like or subscribe to the channel. I would really appreciate that, and will help me make even more videos for you. All right, let's take a look. So, income statement over here for Amazon. The total revenue starting from 2017 to 2020. Whenever we don't have data for 2021, we can always take a look at the quarterly data. I myself do take a look sometimes, but I do like looking at the bigger picture, like the yearly ones. But if you want to be safe and 100% secure, you can always take a look at the quarterly here. I don't want to confuse you with different with examining like different timelines, like first year and then quarterly. It may be a little bit confusing, and you can make a pretty informative decision from looking at this data basically. Total revenue, as you see here, been growing very, very decently. And I still remember many years ago when Amazon wasn't even profitable. They were actually losing money. And it's insane how much they grew. Like Jeff Bezos did a fantastic job with Amazon. So the gross profit over here, as you see again, starting from 66 billion back in 2012, and now has more than doubled, which is insane, in 4 years. Tremendous growth for Amazon. So operating expenses, of course, they will follow the profit, but what matters is the bottom line, the net income, which is 3 billion in 2017, 10 billion, 11 billion, and 21 billion. An absolute cash machine for Amazon right now. The balance sheet, the current assets of the company and the non-current assets of the company, both growing, both at a similar rate, an amazing growth again, 132, almost 3 billions for current assets and 188.5 for non-current assets. And liabilities, nothing insane here, obviously growing with the assets. And what matters is the total equity, which is from 27.7 billion back in 2017, has grown almost 4 times to 93.4 billion. It's basically hoarding money. Amazon is basically hoarding money at this point, making money hand over fist, which is awesome to see for the company. Cash flow. Operating activities, again, Amazon grew from 18 billion to 66 billion. Insane amount. Has grown tremendously well. And we can also examine the investing and financing activities. Very, very normal stuff. So investing here in huge amounts. And the nice thing that I really like about Amazon is that they're investing in their own growth. As you see here, this is the line which basically implies that they are purchasing equipment and purchasing buildings, for example, or warehouses. So this basically implies that they are growing in terms of product and warehouses, and basically they're expecting to sell more. So this tells you a lot about how the company is growing. And I love to see that they're actually spending more for investing in their own infrastructure, which is awesome. And obviously spending a little bit more for purchasing businesses. That this could be even logistics. I mean, it doesn't really matter. These are quite small actually when compared to Amazon in terms of their value that they're spending. And in financing, they have a little bit of, I suppose they got some debt over here. And this is the trailing 12-month period, basically, is the last 12 months. So over here you can see that they got some debt of 20 billion, which is a pretty large amount. But they have repaid quite a lot as well. And with the cash that they own, they have, I don't think that would be much of a problem for them really. And it looks like the previous year they have been, eliminating some of the debt. This is all normal here. I wouldn't be worried about that about those that much. You can see that the capital expenditure has risen a lot, which also implies that the company's operations have tremendously risen. The cost has risen as well. Makes sense. So back over here, sorry. Where we can take a look at the free cash flow, looks like nothing in the change of cash goes negative over here. So it looks like they like, keeping some of the money that they make, which is kind of nice to see. I like companies that are making a stockpile of money, at least have a good stockpile of money. I want them to invest, obviously, of course, but I also like them to hoard some of that money, really, to tell you the truth. It provides health to the balance sheet of the company, and I like to see that. It makes the company more valuable in terms of an investor. So it makes it more valuable for you. So free cash flow growing tremendously over here from 30 billion to 1.106 billion. Insane growth. And the last thing that I like to look at is some of the key elements, key statistics. And you can go really deep over here. I like to see the forward PE being 83, which you would expect from a company of that sort. And the debt to equity ratio 0.55, which is less than the industry and still pretty healthy. I'm not worried about that. Now the book value per share is insane. So you would kind of expect that because the company is insane in terms of assets. I mean, as I mentioned earlier, it's kind of hoarding assets. So that's nice to see compared to the industry of 1.53. Companies clearly has a lot of money. And so some of the ratios as well. Over here, the current P is 68. It looks like it's actually growing, which is not great, but I wouldn't be worried that much. I'm not even sure if that's correct over here, to tell you the truth, because I saw it being the same in another video. It's a little bit weird. But the price to book value also higher than the industry, which you like to see. No, you wouldn't like to see, sorry, because that's the price to book. So it means that this is higher price basically per book value. So it's actually expensive, but you would expect it to be selling at a premium. I mean, it's a super popular stock that kind of everybody wants to hold. Plus, it's actually on the very high side right now, so it's almost at all-time highs. And I like that I see some consolidation here. It may be ready to move up higher. And by consolidation, I mean that it's hovering at that similar area for many months now, since pretty much September 30. So typically this implies that it could potentially have a continuation upwards. Now, my sentiment about this and what do I feel about Amazon. The company is insanely profitable. I mean, the company is making money, as I mentioned earlier, hand over fist. It's like super profitable. And I obviously like the company a lot, and I would for sure buy Amazon. I just would like to get it at a better price if possible. Now, will I ever get it at a better price? I'm not sure about that. It may even go more than 5,000 very quickly. Even in a month or so, it could happen in the blink of an eye. But if I'm buying, I want to be buying at good prices. So I would like to see a drop before buying. That's my thing. I kind of want to buy not at all time highs, and it's probably a good idea generally speaking. But some other people who are buying for like 10 years and they don't really care. They're like, okay, I just want to enter the stock and I don't really care. And those people are probably going to be doing great as well, if not even greater than us, which are trying to kind of wait out a little bit because it may never happen really. And also, when you don't have an upper threshold right now and it's basically at all-time highs, there is no resistance. So basically, nobody has bought at any level over here, so nobody wants to sell to regain money that they could have potentially lost. So if the stock went down at 1800, somebody who bought over here would want the stock to go up in order to sell and gain the money back. So this creates selling pressure. But over here, there is no selling pressure. I mean, nobody has lost money. Everybody's making money. So it can grow higher quite quickly. Still, I would like to get it at a better price, but the sentiment is definitely that I would buy the stock because the stock is amazing. It's doing awesome, making a lot of money, and it's a buy from me. What do you think, guys? Would you buy? Do you own, or would you wait a little bit maybe? I don't know. It's your decision. But if you enjoyed this video, you can also take a look at this one that I created about a few days ago, and where I'm discussing Facebook and whether it's worthwhile investing in it. I have, so that kind of gives you a hint. But you can always make and you should make your own decisions. And just remember that this is basically for entertainment and just potentially giving you some idea of the financials of the company. But the decision is always yours. So thank you guys for watching, and I'll see you in the next video, which is going to be a similar one for another company. It's a type of the video that I really enjoy making, and I have a great time doing so. Thank you again, and I'll see you in the next one very soon. Bye bye.